Following the impressive first quarter revenue growth of major oil firms in Nigeria, Vetiva Research expects the top-line performance of oil companies to be sustained into the full year. Victoria Ejugwu, analyst at Vetiva Capital Management, joins me now to unpack the company's projections for Seplat and Total Energies, among others. Thank you so much, Victoria, for joining us today.
Thank you, Esther, for having me today.
Well, let's get right to the numbers. We're looking at today quickly Total Energies and Seplat, but let's quickly start with Total Energies. The company saw strong revenue growth, but a drop in earnings. Just very briefly, walk us through some of the positives and pain points. Very briefly, please.
So, like you rightly said, we saw strong revenue growth, but a decline in earnings. And really, the pressure points for Total and downstream players at large has really been margins. So we've been seeing rising ex-depot prices, but the price caps have still been sustained. So that's been hurting their margins. So whilst we're seeing strong revenue growth and we're seeing increases in the ex-depot price, that's the price at which they're getting their supplies from, they're not able to pass on this price increase to consumers, and that has been hurting their margins. And that's the reason why we're seeing a decline in earnings for Total, and it's generally been a trend for downstream players. So not just Total, it's most downstream players on the exchange.
And now you also did point out that the continued petrol subsidy still continues to put pressure on the earnings of these producers. Talk to us about that.
So like I said before, because the federal government will be trying to reduce its subsidy expense, so it's increasing the ex-depot prices. And so the prices at which these downstream players are getting fuel from their suppliers from has been going up. But I mean, we still have the price caps, we still have subsidies, and so they're not able to pass on these prices to consumers. Market forces are not coming into play here, and because of that, it has been hurting their margins. They're buying, they're getting supplies at very expensive, and not able to pass this on to their consumers or to their customers.
All right, a final point on Total Energies. Operating performance was actually quite interesting. Talk to us about that briefly, especially around is it cost of funds or cost of finance?
So that was quite impressive for us because we saw operating expenses being sticky, and that's amidst the high inflationary environments that we're in. So operating expenses only went up by about 0.1%, very marginal. And so that sort of bolstered their operating profit. So the strong revenue growth, the fact that they're able to keep operations in check or keep operating costs in check, their operating profit soared even faster than their gross profits.
Right. Let's quickly go to Seplat. A completely different story with Seplat. We did see strong revenue growth also, and of course we know that last year Seplat did suffer material losses owing to, of course, pipeline vandalism and oil theft. But the story is different this time. Talk to what is that one thing that Seplat did that turned things around?
So there's been a mass-wide campaign on oil theft. The federal government has been trying very, very hard to clamp down on oil theft. But aside that, Seplat had an advantage, a new export route, that's the AEP pipeline, where it was able to route most of its exports. That route is less prone to vandalism, is a subsea pipeline, so it's less prone to vandalism, and so it was able to route most of its export through that route, and that's why we saw improved volumes. So aside the lower base from last year, improved drillings, safeguarded volumes, and that translated, or that was evident in the numbers that they posted in Q1.
Now, how is this changing sentiment? Let's talk about, I mean, the equities, the stocks of these companies on the NGX. How is it changing or impacting on sentiment for investors in terms of how investors are looking at these companies in the medium to long term?
So for Seplat particularly, we've seen the stock rally after its earnings release. So coming into the year, there's been a lot of uncertainty as to what was going to play out in the upstream segment, but we're seeing sort of stable. We're seeing some sort of stability in the upstream segment. For Seplat particularly, like I said before, the advantage it had, the AP pipeline has also boosted sentiments for the counter. And we'll see the stock rally. Aside that, it's in a very strong financial position, increased dividend payments, and because of that, we've seen investors positioning the stock. Right, it has rallied about somewhere about 7% this year, and because it's a large cap name, it has also bolstered the oil and gas sector. Aside Seplat, for the downstream players, we've seen strong interest in Total Etana. So despite the mixed performance, I guess investors are also positioning for the mid to long term in anticipation of removal of subsidies, how that will free up margins for them, and also bode positively for them in the mid to long term. So generally, the outlook is still very positive for Seplat, for Total, for the downstream players, for the upstream players at large.
Thank you so much, Victoria, for talking to us today. We appreciate your time on the show. Victoria Ejugwu, analyst at Vetiva Capital.